ExamPrep.School. Wyoming Property and Casualty Insurance Consultant Exam, exam code 12-WY-47 or OPWY47. There are 4 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Casualty, insurance terms and related concepts. Casualty, policy provisions. Casualty, types of policies, bonds, and related terms. Casualty-only statutes. Common rules. Property, insurance terms and related concepts. Property, policy provisions and contract law. Property, types of policies. Rules common to property and casualty. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Which of the following dwelling types is eligible for coverage under an HO2 broad form homeowners policy? A. A 3-family dwelling where the insured resides in one unit. B. A seasonal hunting cabin that is not occupied year-round. C. A condominium unit rented to tenants. D. A mobile home without a permanent foundation. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is A. The correct answer is a 1 to 4 family dwelling occupied by the owner. Seasonal cabins, rented units, and unfixed mobile homes are ineligible for HO2. Reason B is not correct. Seasonal dwellings aren't eligible because HO2 requires primary residence occupancy. Reason C is not correct. Rented condominium units aren't eligible since the policy is for owner occupants. Reason D is not correct. Mobile homes lacking a permanent foundation are specifically excluded from HO2. Question 2. Under an HO3 homeowners policy, what minimum percentage of the dwelling's replacement cost must be insured to satisfy the coverage A coinsurance requirement? A. 60%. B. 70%. C. 90%. D. 80%. The correct answer is D. The correct answer is 80% because HO3 requires at least 80% of replacement cost coverage to avoid penalty under the coinsurance clause. Reason A is not correct. 60% is insufficient. HO3 specifically sets the threshold at a higher percentage. Reason B is not correct. 70% does not meet the standard. The policy's minimum is 80%. Reason C is not correct. 90% exceeds the minimum. The requirement is exactly 80%. Question 3. Which homeowner's form provides open peril coverage for both the dwelling, coverage A, and personal property, coverage C? A. HO2 broad form. B. HO3 special form. C. HO4 contents broad form. D. HO5 comprehensive form. The correct answer is D. The correct answer is HO5, which extends open peril coverage to both the dwelling and personal property, unlike HO3, which names personal property perils. Reason A is not correct. HO2 is named peril for dwelling and personal property, not open peril. Reason B is not correct. HO3 is open peril on dwelling only. Personal property remains named peril. Reason C is not correct. HO4 covers contents only and is a renter's form with named perils. Question 4. Which of the following causes of loss is not covered under an HO4 renter's policy? A. Theft. B. Smoke damage. C. Fire. D. Termite damage. The correct answer is D. The correct answer is termite damage, which is an excluded loss. HO4 names standard perils such as fire, smoke, and theft, but excludes infestations. Reason A is not correct. Theft is a named peril covered under the renter's policy. Reason B is not correct. Smoke damage is included as a named peril in HO4. Reason C is not correct. Fire is a primary named peril on the renter's form. Question 5. Under an HO6 condominium unit owner's policy, coverage A typically insures which of the following? A. The unit's foundation and load-bearing walls. B. Improvements, alterations, and appliances installed within the unit. C. Personal property of the insured's tenants. D. Exterior landscaping and common areas. The correct answer is B. The correct answer is improvements, alterations, and appliances. HO6 covers unit enhancements rather than the building's main structure or common areas. Reason A is not correct. Foundation and load-bearing walls are covered by the association's master policy. Reason C is not correct. Tenant personal property is not covered under the unit owner's HO6. Reason D is not correct. Common areas and landscaping are insured by the condominium association. Question 6. A homeowner purchased an HO3 policy and later moved a single-wide mobile home onto the insured premises. The insurer informed the homeowner that the standard HO3 does not cover mobile homes. To provide proper coverage for the mobile home, which endorsement should the homeowner request? A. Recreational vehicle endorsement. B. Mobile homeowner's endorsement. C. Manufactured home endorsement. D. Mobile dwelling endorsement. The correct answer is C. The manufactured home endorsement modifies an HO3 policy to include coverage for a mobile or manufactured home, extending dwelling and other coverages similar to those provided under a homeowner's policy. Reason A is not correct. This endorsement applies to recreational vehicles used for travel, not permanently sited mobile homes. Reason B is not correct. There is no standard ISO endorsement named Mobile Homeowners Endorsement to add mobile home coverage. Reason D is not correct. No standard ISO endorsement called Mobile Dwelling Endorsement exists for mobile home coverage. Question 7. A homeowner insures a 30-horsepower outboard motorboat under an HO3 policy. When the boat is in use on the lake, which of the following describes the coverage for liability claims arising from bodily injury or property damage? A. Excluded unless a watercraft endorsement is added. B. Covered up to the policy's liability limit. C. Automatically included up to $1,000 per accident. D. Covered under the dwelling coverage section. The correct answer is A. Homeowners' policies exclude liability coverage for watercraft with engines exceeding 25 horsepower unless a specific watercraft endorsement is purchased to add that coverage. Reason B is not correct. Standard liability coverage does not apply to outboard motors exceeding 25 horsepower without endorsement. Reason C is not correct. There is no automatic $1,000 limit for watercraft liability under an HO3 policy. Reason D is not correct. The dwelling section covers property damage to the home, not liability for boats. Question 8. A lightning strike nearby forced a fire department response, resulting in a $650 service charge to extinguish a fire that threatened the insured's dwelling. Under an HO3 policy, how much will the insurer pay for the fire department service charge additional coverage? A. $500. B. $150. C. $650. D. $1,000. The correct answer is A. HO3 policies include additional coverage for fire department service charges up to $500 per occurrence, regardless of the actual amount billed. Reason B is not correct. This reflects an arbitrary partial payment and does not match the standard policy limit. Reason C is not correct. The policy limit for fire department service charges is lower than the billed amount. Reason D is not correct. There is no $1,000 limit for fire department service charges in an HO3 policy. Question 9. A severe storm uprooted 30 trees, each worth $400 on a property insured under an HO3 policy with a $150,000 coverage A limit. After filing a claim for the total $12,000 loss, how much will the insurer pay for trees, shrubs, and plants? A. $12,000. B. $15,000. C. $7,500. D. $500 per tree. The correct answer is C. HO3 policies limit coverage for trees, shrubs, and plants to 5% of the coverage. A limit with a maximum of $500 per tree. Here, 5% of $150,000 equals $7,500, which is the overall cap. Reason A is not correct. This ignores the 5% overall coverage limit applied to trees, shrubs, and plants. Reason B is not correct. This reflects a 10% limit error and exceeds the actual 5% cap. Reason D is not correct. While there is a per tree cap, the total payment cannot exceed 5% of coverage A. Question 10. Which of the following is not one of the four modular parts of a commercial package policy CPP? A. Common policy declarations. B. Common policy conditions. C. Coverage parts. D. Definitions. The correct answer is D. The four modular parts of a CPP are common policy declarations, common policy conditions, coverage parts, and common policy endorsements. Definitions is not a standalone part. Reason A is not correct. This is a core module that provides key information about the policy and insured. Reason B is not correct. This module outlines the obligations of both insurer and insured and is part of the CPP. Reason C is not correct. Coverage parts are separate sections providing specific property or casualty coverages. Question 11. Under a business owner's policy, a small restaurant is eligible for coverage if its annual gross sales do not exceed which amount? A. $1 million. B. $2 million. C. $3 million. D. $5 million. The correct answer is C. Eligibility rules for a BOP allow small restaurants to qualify when annual gross sales are no greater than $3 million. Reason A is not correct. A lower sales threshold is not sufficient to meet the published BOP eligibility guidelines for restaurants. Reason B is not correct. This figure is below the actual maximum limit set for restaurant eligibility. Reason D is not correct. This exceeds the maximum gross sales allowed for restaurant eligibility under a BOP. Question 12. Under Section 1 of a business owner's policy, business personal property is covered if it is within what maximum distance from the described premises? A. 50 feet. B. 100 feet. C. 200 feet. D. 500 feet. The correct answer is B. Section 1 automatically covers business personal property located within 100 feet of the premises, unless otherwise endorsed. Reason A is not correct. Coverage extends beyond 50 feet under the standard BOP form. Reason C is not correct. Coverage does not extend as far as 200 feet without an endorsement. Reason D is not correct. Coverage does not automatically apply out to 500 feet under Section 1. Question 13. The seasonal increase percentage endorsement on a business owner's policy typically allows what maximum increase above the stated limit to account for inventory fluctuations? A. 10%. B. 25%. C. 50%. D. 75%. The correct answer is B. The endorsement permits an automatic increase up to 25% above the policy limit during peak seasonal inventory periods. Reason A is not correct. A 10% increase underestimates the standard maximum allowance. Reason C is not correct. A 50% increase exceeds the typical maximum set by the endorsement. Reason D is not correct. Coverage does not automatically allow a 75% increase without special negotiation. Question 14. A hired auto liability endorsement on a CPP does not provide liability coverage for which of the following vehicles? A. Autos rented under a short-term lease. B. Autos borrowed from third parties. C. Autos owned by the named insured. D. Autos hired for business travel. The correct answer is C. The hired auto liability endorsement covers vehicles leased, hired, or borrowed, but excludes any owned by the named insured. Reason A is not correct. Coverage does apply to rented vehicles under a short-term lease. Reason B is not correct. Coverage extends to vehicles borrowed from others under the endorsement. Reason D is not correct. Vehicles hired specifically for business travel are covered. Question 15. A cafe operating under a business owner's policy experiences wine damage to its outdoor sign attached to the building. The replacement cost of the sign is $6,000. Under the standard BOP, what is the insurer's maximum liability for the outdoor sign? A. $1,000. B. $2,500. C. $5,000. D. $6,000. The correct answer is B. The standard BOP includes a special sublimit for outdoor signs of $2,500 per sign, without coinsurance or aggregation beyond that amount. Reason A is not correct. This amount is below the ISO sublimit for a single sign under a BOP. Reason C is not correct. This assumes doubling the sublimit, but the policy limit is fixed at $2,500 per sign. Reason D is not correct. This assumes full replacement cost, but the policy caps payment at $2,500 per sign. Question 16. A retail shop carries a BOP with business income coverage that has been endorsed to exclude extra expense. After a covered fire loss, the shop continues to pay employees to maintain store readiness, but also rents a temporary location to serve customers. Which of these expenses will the policy reimburse? A. Rental fees for the temporary location. B. Employee wages during the suspension period. C. Cost to install new inventory shelving. D. Advertising expenses to announce reopening. The correct answer is B. Business income coverage without extra expense endorsement reimburses net income and continuing operating expenses such as employee wages, but expressly excludes extra expenses like rent or advertising. Reason A is not correct. Renting a temporary location is classified as extra expense, which is excluded by the endorsement. Reason C is not correct. Installing shelving is a property loss, not business income coverage for ongoing expenses. Reason D is not correct. Advertising costs are extra expenses and are excluded by this endorsement. Question 17. A manufacturer's commercial property policy has an 8% annual inflation guard endorsement. On day 180 of the term, a hailstorm damages the building. If the original coverage limit was $500,000 and the pro rata increase is rounded to the nearest thousand, what coverage limit applies at the time of loss? A. $500,000. B. $500,000 to $40,000. C. $536,000. D. $520,000. The correct answer is D. The inflation guard endorsement increases the limit by 8% annually on a pro rata basis. After 180 days, approximately 0.493 of a year, the increase is 0.08, multiplied by 0.493, approximately 3.9%, yielding approximately $519,500, which rounds to $520,000. Reason A is not correct. This ignores the pro rata inflation adjustment provided by the endorsement. Reason B is not correct. This applies the full 8% annual increase instead of prorating for 180 days. Reason C is not correct. This miscalculates the pro rata increase percentage for the half-year period. Question 18. Under the National Flood Insurance Program's Emergency Program, what is the maximum flood insurance limit available for a single-family dwelling? A. $35,000. B. $50,000. C. $100,000. D. $250,000. The correct answer is A. The NFIP's emergency program provides up to $35,000 in structural dwelling coverage under flood insurance. Reason B is not correct. That value exceeds the emergency program limit and more closely aligns with standard program contents limits. Reason C is not correct. This amount is the maximum for personal property under the regular program, not emergency structural coverage. Reason D is not correct. This reflects the regular program dwelling limit, not the emergency program cap. Question 19. Under a standard homeowner's earthquake endorsement, the deductible is typically what percentage of the insured dwelling limit? A. 5%. B. 15%. C. 10%. D. 20%. The correct answer is C. Most homeowners' earthquake endorsements apply a deductible equal to 10% of the dwelling coverage limit. Reason A is not correct. A 5% deductible is too low compared with the industry standard for earthquake coverage. Reason B is not correct. While some insurers offer 15%, it is above the typical standard endorsement percentage. Reason D is not correct. A 20% deductible is rarely used as a standard and exceeds the common endorsement level. Question 20. Under a mobile home insurance policy, the transportation peril automatically covers a mobile home in transit for how many days after it leaves the original location? A. 30 days. B. 60 days. C. 90 days. D. 120 days. The correct answer is A. Standard mobile home policies include automatic transportation coverage for up to 30 days after removal from the original site. Reason B is not correct. 60 days of coverage may be offered by endorsement but is not included automatically. Reason C is not correct. 90 days exceeds the standard automatic transit period for mobile homes. Reason D is not correct. 120 days is not part of the automatic coverage and would require an endorsement. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below. We read them all. Find full practice exam books in the description or at ExamPrep.School.